Stock market update, 5th of May, and as ever, a ton of stuff happening. So let's get right into it. Okay, what do we have? Valuations, that's price earnings ratios. Share price relative to profitability of company. Red is bad, and as has been the case for about a year now, only banks look cheap and energy look cheap. And when I say banks, I don't mean the regional ones. Necessarily, they do look cheap, some of them, but there might be a good reason for it. So it tells us that valuation is not the only thing we should be measuring. Momentum, this is how things have been over the past week. Eli Lilly stands out, but the undervalued energy sector has not been standing out. Tech has, because of its earnings, had some good moves up. Tesla, after a bit of a drop, has continued upwards. Let's look at some of those bellwethers in more detail in a second. As far as price earnings growth goes, which is another measure of share price relative to growth in profits, anything above 1 is overvalued technically. So there's very little which is undervalued, which is why some of the miserable suicidal people are thinking that things are going to fall sharply in the market. The Nasdaq's up 20%, twice as much as the UK market so far this year, which tells you quite a lot, doesn't it? The S&P 500 still, of course, very much broken out of that downward trend. It's up here. The rise has slowed down. Some of the more miserable people think it could fall as low as that. Some of them who are even more miserable than that think it could fall as that. It'll probably stay along here, and worst case, will drop and then go back up. So worst case, it'll be more like that. Momentum is starting to go in the right direction upwards on that, so that's positive. The FTSE 100, however, is capped. That's the cap there, and this is most probably going to do that. Apple, good news stories. Lots of banks saying bye, bye, bye. JP Morgan, Credit Suisse, Bank of America, all seem to like it, with the exception of some numpty at Lightshed Partners who thinks it's a sell, somebody trying to be a hero and make a name for themselves. That's a downward trend which it had broken out of. It's going here. That's the bull case. That's the base. And that's the bear. I am a buyer of this. The momentum, if you want to look at that, is in that direction. If you want to look at what other analysts think, well, the highest of the highs is 210. Given that it's currently at 165, there's not much room to the upside in the next 12 months or so. I think it'll actually do better than that. 12-month average target is 171, and given it's 165, that doesn't leave much room to the upside, but I think the analysts, as ever, are wrong. Alphabet, downward trend, moved above that. Positive stories on the whole. Everybody's a buyer of this one. Nobody wants to get sacked for saying don't buy Alphabet, from Deutsche Bank to Oppenheimer to JP Morgan, SocGen. They're all buyers of this. And you see the drop off the cliff in momentum terms we had last year, and now it's moving up. That's the monthly MACD, the weekly MACD in the right direction, the monthly stochastic in the right direction. So my argument is it's going to go over there. Of course, it could do this and then go up, but overall, that's the direction of play. And if you think it goes to the high point at 160 from where it is at the moment, 105, you're making a bloody good return of 60% on your money as well. Microsoft, which I absolutely love. There we go. That was the downward trend. It's moved up above that. Yes, it could fall back to that resistance it broke out of. That would give it a 22% to the downside. That's not going to happen. That's the news. These are all the analysts thinking buy. Now, of course, watching this on social media, you're probably going to be more diverse of thought, as people on social media often are. And you're going to say, no, let me tell you why everybody else is wrong and I am right here on social media. And that's perfectly fine. But let me tell you, that's where it's going. And if it takes even 18 months to get there, that's fine. That'll give me a 50% return on where I am at the moment, roughly 50% on where I am. Amazon, which had that massive ugly fall last year, has given everyone the opportunity to make their money back again over there. Okay, pretty good news stories. Everybody's a buyer. Goldman Sachs, Barclays, State Street, Wedbush, all the whoever the hell Wedbush are, they're all buyers. And you can also see what the analysts think. Now, I think the analysts, again, tend not to be right anyway, but this is what they think. Some good numbers there. You're basically talking about 100% return on your money, which is what I said ages ago, that we're going to get that kind of return, and we'll be back playing in that area. So Amazon will be back up there. Now, Disney is on the mat. It's been knocked out. It's still on the mat. It's trying to get up and it can't seem to do it. And there are some stocks in this category, but the momentum is there and it'll take a bit of time, but it will get there. Certainly all the banks think it will get there. And not only that, it's currently at 97, the high point 177 according to some of them. On average, return potential 31%. Nvidia, downward trend there, moved to the upside. Now, Nvidia, I own shares in all of the ones you've seen today, so I should better disclose that interest. And it's moving up on the momentum. News, fairly positive. Analysts, positive. Not much to the upside left, so I might have to get out of this one anyway. Not because of what the analysts say. I might have to get out of it because there isn't much upside left, I don't think. I might keep some, because remember, that was my target, and it's near there. So I've got less upside than I have potential downside. So I'll keep an eye on it for the moment, just in case it falls back. But that's where we are with Nvidia. Tesla, I did exit. It went up, then fell back, and I thought, you know what? Don't like the volatility. I will get out of it. Some of you may stay on to there. Great, good for you. But I just got fed up with the volatility, actually, in the end, and felt that I had other stocks which can do better. So it didn't do as well as I thought it would. I made less than I thought I would, but made some. And that's the direction we're looking at. If you want to know where I put these updates, obviously look at alpeshpatel.com/links, and you'll see them on my Telegram and YouTube channels as well. Okay. There is what the analysts think. On average, you get a 15% return if the analysts on average were right, but who's ever been on average? And the high would be 300 from 168. So that'd give you double your money within potentially a year, if you believe the high point of that. Meta, that dropped 77% last year, and it's recovering just as bloody quickly as it fell. Actually, recovering more quickly than it fell. And there's your upward move over there. All the banks telling all their wealthy clients to buy. And for those of you who believe in conspiracy theories, Goldman Sachs can't say buy publicly and then secretly tell their clients not to. Okay, there's laws against that. And of course, they're law-abiding. Return potential, well, there you go. But actually, a lot more than that. So don't forget to look at my campaign for 1 million, where I am teaching 1 million people how to be better at investing. And lots of free resources there. And if you want to get those free resources, including download copies, free copies of my books, which have been published by the Financial Times and so on, have a look at all of that. And there are some other books there over my shoulder, the ones that I've written. Thank you very much. I hope you found these useful. If you have, please put it into the comments box so that I know to continue doing these, because your feedback is important. And as I mentioned, please have a look at alpeshpatel.com/links as well. You'll get a ton of free resources there, including a little experiment I've done with ChatGPT, where I fed it with a lot of data and come up with some stock names and see if they coincide with the ones that I also liked. So have a look at that there. Thanks very much, and you can always email me as well. Thank you.